Hey everyone, it's Abraham from Bitcoin Ninjas, and welcome back for part 2 of our video series covering our Ninja Signals TradingView buy and sell alert script. During this part of our video series, we'll be covering our Ninja Signals script in a lot more detail. We'll go through step-by-step instructions on how to find the script on TradingView and how to add it to your charts. We'll show you guys how to set the various alerts that the script has to offer, including buy or long alerts, sell or short alerts, stop loss alerts, and take profit alerts. We'll also show you guys how to use the various adjustable filters and indicators that the script offers so you can take your level of understanding with the script to the next level. We'll also give you guys some general tips on different calibration styles you can use when tuning the script and different sizes and types of candles that you can use with the script and some of the pros and cons of each of those. We'll also go through some of the frequently asked questions and frequently raised issues that come up when people first start using our script. So the goal of this part of our video series is to make this as helpful as possible and really help you guys understand the script and learn to use this powerful trading tool. So let's get started. Really quick, before we get into detail, I want to mention for those that weren't here for the first part of this video series that we do offer an entire week of free access to the script. That's full access to the script for an entire week for absolutely free, so you can try it out, make profit with the script, set alerts with the script. Again, it's full access for an entire week for absolutely free. And if you come to our website and find the script listed in our Ninja shop, you can scroll down and see the 3 easy to follow steps to start your free trial. We don't require any credit card, no payment information. You get full access to our script for completely free, basically for just liking and favoriting our script, following our TradingView account, and signing up for our free website, bitcoinninjas.org. No participation is necessary. And with that being said, let's get into detail with the script. So here's the script in TradingView. This is the layout and what it looks like here. And so really quick, I'd just like to review with you guys what this is. There's a lot of newcomers, and just want to make sure that we're all on the same page regarding what this tool is and how it can be used. So our Bitcoin Ninja Signals buy and sell alerts TradingView script with backtesting strategy is basically a script that automatically generates buy signals and sell signals, which can also be used as long signals or short signals for margin trading, that allows you to combine various facets and strengths of technical analysis, many different indicators, many different aspects of trading knowledge, and it puts it together in a simple, easy to use software package combined with the Pine script code that TradingView offers to then generate automatic buy and sell alerts for you that can be sent to your email address, they can be sent to your cell phone, they can just result in a pop-up message or a sound notification, but those alerts can then tell you when to place buy or sell orders in order to generate profit. And one of the powerful aspects of this is that it also includes a backtesting strategy. So in addition to the script that actually generates the arrows and generates the alerts, each of those scripts has a backtesting strategy that then lets you test out various trading styles and different trading options using those alerts and arrows that the script would generate. So it gives you a very powerful tool because you can look back in time and test out how a trading strategy would work using these signals, which then sets you up for the next level, which would be live testing, where you set test alerts and actually watch them live as they occur in the present going into the future. And after that, then you can have a solid evidence-based view of how to approach trading, how to do your trading, what amounts to use, what approach, what strategy to use. It really is a powerful system. And if you combine these signals and this backtesting with automated trading software that lets you place orders automatically using the API keys that you can get through your exchanges, you can set up a profit generating system that's making trades for you and generating profit for you 24 hours a day, 7 days a week. So it's a very, very powerful system. I'm definitely excited to tell you guys more about it. And so with that being said, let's get into the details of it. So here's the layout on TradingView. And we're going to go through step-by-step instructions on how one would go about finding the script and adding it to the chart, setting it up, setting alerts, and adjusting the various filters and features that the script offers. So let's start fresh here. I'm going to remove them from my chart. I'm going to come up here on TradingView to the indicators button, click that. I'm going to go to my invite only script section. This is where the script will show up if you have already completed the steps necessary to start your free trial or you've purchased a paid license for the script. So I'm going to come here to find, I want to use version 1 in this setting. So I'll click those and add those onto the chart. And there you go. So they've now been added to the chart. And so I just want to mention to you guys also that both the strategy and the script generate the basic red and blue buy and sell arrows that you see, such as they're actually triangles, but we can call them arrows. Blue buy arrow, red sell arrow up here. Both the script and the strategy will generate those, so you can hide those or show those. They're very helpful if you only want to have one of them added to your chart at a time. So let's get them both back on here, and let's just set up some basic settings before we get started. Okay, and I like to hide the script and do all my testing and adjusting on the backtesting strategy, and that way once I'm ready I'll just plug those settings into the script. So let's continue on with the step-by-step instructions. We've already got the script added to our chart. Next, we're going to select the preferred coin that we want. So in this particular case, I have Binance coin with USDT or Tether base pair. So let's try to define that again. I'll show you guys. You search for the coin pair here. You choose the exchange you want. If it's a coin that's available on multiple exchanges, you may see multiple results. For example, let's do a very common Bitcoin USD. You can see all the different exchanges that offer that. So in this particular case, let's go back to BNB USDT, and I'm pulling it up for Binance Exchange. So here we are. It's now pulled up. Please note that at this point, if you're trying to trade on certain USD or USDT base pairs, you may need to go to the properties section. Sometimes the backtesting results will not show any results here. It will say no data. If that's the case, go to the settings of your backtesting strategy, pull up your strategy, click on the settings button or format button, go to the properties tab, and then you'll want to change this to contracts. So one contract is one coin. So in this case, I'd be trading 10 Binance coins at a time if I change this to contracts. So we don't need to do this right now because the data was working fine, but for some coins, again, most commonly Bitcoin, when traded on the base pair of US dollars or US Tether, USDT, you'll need to change this to one contract, and you'll need to change your initial capital to be about the price of one Bitcoin. So right at this time, it'll be around 6,500. But that's not necessary for this base pair, so let's set that to how I had it, with the default setting. Okay. So now we have our exchange and our trading pair pulled up. We have our script added to the chart, the strategy added to the chart. The next step in the instructions is going to be adjusting the various settings in our backtesting strategy. So I'm going to pull up those settings. I'm going to go to inputs, and so now we're going to go through these one by one. The first setting you'll see is called calibration. This is a resolution function of TradingView Pine script code. It essentially means what candle size the script should use when using some of its core calculations that are used in placing buy and sell arrows. The larger the number you use, the more spread out the arrows are going to be. The smaller number you use, the more close together and aggressive the trades will be. This number is in minutes, and so if you want it to match the candle size that you use on the chart, you simply need to make them match. If I was using 30-minute candles on the chart, I would use a 30 calibration number here. But you can also have them mismatch. As you can see here, I'm using 1-minute candles, and I have a calibration of 30. So let me show you how the arrows will spread out as I increase that number. Let's change that to 60. Not much of a difference. Let's crank that up to like 200. You can see arrows are becoming very spread out. Whereas if I bring them back together, remember we were at 30 when we started, now we're up to 200. I'll bring that down to 10 minutes. And you'll see that trades are much more aggressive. Lots and lots of trades now. Let's put that back to 30. So that allows you to adjust how aggressively you're going to trade. If you're not happy with arrow placement, if you're not happy with arrow placement when using the traditional candle calibration, you can also tweak the script to use Heikin-Ashi candles. Heikin-Ashi candles are calculated a little bit differently, and so they help to bypass some of the noise and some of the sideways choppy movements in the market, which are not always good for trading. So if you're not happy with arrow placement using regular candle calculations, keep the chart on regular candles, but then click the Heikin-Ashi calibration box, and you'll see a slightly different layout of the arrows. And sometimes this can help you find profitable settings with pairs that are more difficult to configure and tune the script for. So I'm going to leave that off for now at default. Also, as you start to knock out different buy and sell arrows, as you apply different buy and sell filters to the script, you may notice that you may have a bunch of buy signals in a row or a bunch of sell signals in a row. So if you don't like that, if you don't want to use those multiple arrows in a row for pyramid trading or different styles of trading that might take advantage of those, you can limit those by placing a 1-to-1 buy to sell arrow ratio filter here. For example, let's say I toss on, we'll go through these in more detail later, but let's say I just set a bunch of different buy filters to knock out a bunch of different buys. We see almost all sell arrows are left on the chart. So if I now activate the 1-to-1 buy sell arrow ratio filter, we'll see that a lot of those are going to disappear because it's going to knock it down to just 1-to-1 arrow. So after a buy arrow, it will wait for a sell arrow. After the last sell arrow, it will force the script to wait for the next buy arrow to come. So in this particular case, we're not seeing a lot of trades because most of the buy arrows are knocked out from all the buy filters I applied. So let's back off on some of those. And we see some more arrows are now creeping in. We see more net profit is being shown in the backtesting result, more numbers of trades, etc. But we'll go through these filters in more detail here once we get down to it. So that's how the 1-to-1 arrow ratio filter works. If your exchange offers margin trading for that particular security or trading pair, you can activate margin trading, which will flip the way that the backtesting strategy simulates buys and sells based on the buy and sell arrows that the script generates. So in this particular case, we're not doing margin trading, but let's pretend we were. Let's activate margin trading, and you'll notice how the closed position orders have now become red short orders, and the buy orders have now become long orders. So this has converted our buys and sells into longs and shorts from the backtesting strategy. So let's uncheck those so you can see those one more time. And I'm also going to hide the regular buy and sell arrows that are displayed by the strategy. If I want to see those, I can just unhide the script and you can see, boom, the red and blue sneaking through there. You can see those. If I hide the script, those will disappear. Now I'm going to open the strategy, and we just see the simulated buy and sell arrows here. Again, if I want to see the regular buy and sell arrows from the strategy as well, so I can leave the script hidden, which is how I prefer to do this. That way I don't have to mess with the script at all until I have my settings determined and finalized. You can leave those at default, which are shown here. You can also, of course, change the color, change the shape. You can really customize the script if you don't like the traditional blue and red buy and sell arrows. So in this particular case, we can see one more time, once I activate the margin trading feature, the buys will become longs and the sells will become shorts. Boom, it's activated, and boom, we see that change. And we see that net profit has increased because now we're making money on the way down as well by placing shorts instead of simply selling or closing our open position after a buy. So we're going to turn margin trading off. Next up is the stop loss. So the way that this works is that as soon as the price drops enough after a buy arrow that your stop loss is hit, it will then flag that by generating an alert if you have an alert set for it, and also by displaying a yellow square on the chart, which again can be changed, but by default it's a yellow square. So if I want my stop loss to be hit if the price ever drops 2% after I buy, I put a 2 in there for 2%, and it will show that accordingly. Now thankfully most of these trades are set up very well, so the stop loss is not getting hit in most situations, and part of that also has to do with the fact that we're looking at 1-minute candles, and so price is not changing a lot, even though some of these peaks and dips seem large. So let's show you guys how that works. Let's increase this up to 15 here, and use some larger candles. Okay. So we're using larger candles now, and you can see in some areas a stop loss is hit. So let's go look at one of these closely. You can see that after a buy point, the price dropped a whole bunch because the buy alert comes here. And just to clarify, because this is one of the frequently asked issues that we see people asking about, the TradingView tests alerts by setting the simulated buys and sells at bar close. So when you see one of these regular blue buy arrows, that means that arrow shows where an alert would have fired at bar close. So at the close of this bar, an alert would fire and an order would be placed depending on whether or not you acted on that alert. Now, TradingView sometimes represents at bar close in one of two ways. Sometimes it shows it actually at close of the current bar, but sometimes it shows it at the beginning of the next bar, like in this case here. But both of those are the equivalent to at bar close. So sometimes if you don't see the simulated buy on the same candle as the actual buy arrow or alert, that's okay. If you can see, by looking really closely, I'll try to zoom in to help you guys, you can see that the buy happened at the beginning of this red candle before the closing price, which is down here. The buy actually happened up top. So this is consistent with where that alert happened. At the end of this candle / at the beginning of this candle. They're equivalent. So don't get alarmed if they're not showing on the same candle. Just check where the actual entry point or exit point was, and you'll see. But this is a great point to show you guys the stop loss. You can see here that after this buy happened, price dropped a whole bunch. We entered at the beginning of this candle, and then price dropped a whole bunch and closed down here. And 2 candles later, it dropped a whole bunch. You can see that the low, the bottom wick of the candle, is all the way down here, around 14 even. And that's what hits the stop loss. The stop loss goes by the wick, by the low or the high, not by the body of the candle. So here, the price dropped enough that that 2% stop loss was hit, and we see that our position was closed here, instead of closing up here at the sell arrow. So in this particular case, that would have been too tight of a stop loss. Excuse me. In this particular case, that would have been too tight of a stop loss, because if we would have had a larger stop loss, we would have had that little drawdown, and then price would have shot up here, and we would have sold up top at the sell arrow up there. The stop loss also can be changed to work as a pseudo trailing stop loss. If I check this box, what that means is that instead of calculating the price drop from the last buy arrow, like the normal default regular stop loss does, by checking this box and turning the stop loss into a pseudo trailing stop loss, it will now calculate that price drop from the last sell arrow. So this can help preserve profits if for some reason you don't want to place an order when a sell arrow happens, or if for some reason you're using an automatic trading software system and an alert does not result in an order being placed at the sell arrow. This trailing stop could help you and save you capture some profits in there. Could help you to save some profit in that situation. So that's how the stop loss works. And a worthy note, before we get into the take profit here, both the stop loss and the take profit work in both directions when the margin trading button is hit. Because that way, if price rises after a short is placed, that would be a loss as well, even though price is rising. And please keep in mind, more experienced traders, that a lot of the people watching this video don't know what margin trading is, or they're just learning about it, and so it's important to explain these things to them so that they can learn as we go as well. So when you check the margin trading box, the take profit feature and the stop loss feature work in both directions. That way, if price rises after a short, the stop loss will get triggered just the same as if price were to drop after a long or a buy alert. And so it works in both ways. Same thing with take profit. If price rises enough after you place a buy order or a long order, you can take profit using this function right here. Or if it were to drop enough after a short is placed, then it will also take profit as well if you have that margin trading option activated. So to set a take profit, similar to stop loss, just set the number you want. If you want to sell every time there's a 2% increase in price, we've set 2 there, and we see right here that take profits are being activated. We see the buy arrow happen here, price increased over 2% here, and a closed position order was placed before we ever got to the sell arrow or sell alert. Another instance here, another instance here, another instance here. So that's how the take profit feature works. Let's set that back to default. Now there's features here that are more preference to GunBot and ProfitTrailer. This is called sell only for profit. And if I check this box, it essentially tells the script, or whatever trading system you're using with the script, to ignore any sell arrows or sell alerts that would happen if they don't result in a set number of profit or more. And so this corresponds to GunBot's setting of TV protection, and the number you would actually enter to set that level of protection would be called TV gain. So here, if I enter a 2 and I activate this feature, I'm essentially telling the script to ignore all sell arrows or sell alerts unless they generate 2% profit or more. And if they do not generate 2% profit or more, a sell order will not be placed. And so what you can see here is that a lot of the regular arrows and alerts have left. They're still here. They're left over. But the actual simulated buy and sell alerts from the backtesting strategy are no longer present. And this is because 2% is a lot per trade, especially when using these small candles at only 15-minute candles. So if we want to see a lot more trades, we're going to have to lower that setting so that it's easier to hit it. So let's say 0.2, just enough to cover some fees, 0.2%. And we see there's a lot more trades now. So in this particular case, there was a buy here, but at this point, this sell arrow or sell alert would not have resulted in 0.2% profit or more. And so the backtesting strategy ignores that alert. It then ignores the next buy alert as well because I do not have pyramid buying activated. I could enable pyramid buying, and we'll get into that later, which would allow me to have multiple buys before I finally sell. But in this particular case, pyramid buying is not active. And so the sell point is ignored, the buy alert is ignored because we still have an open buy going. Price finally rises enough to meet our 0.2% minimum profit. A sell alert does happen while price is high enough, and we see that the position went ahead and closed. And so that's how that works. And again, that corresponds to GunBot specific features called TV protection and TV gain, as well as ProfitTrailer specific features as well. So let's turn that back off. The default is now inactive. I just simply set it to 0 for peace of mind, even though it's inactive. That way just know that it's at default. And we're going to move down to our EMA downtrend buy filter and EMA uptrend sell filter. Now the cool thing about this EMA buy and sell filter is that it corresponds to the EMA trend line you see on the chart. We can see during uptrends we see white dots, and during downtrends we see black dots. So we can use those trends to our advantage to say, hey, I don't want to buy if price is dropping, so let's activate the EMA downtrend buy filter, which will block alerts and buy arrows from happening if we're in a downtrend. And so I'll activate that, and we'll see that buy alerts got knocked off. Now we can adjust the EMA trend line by adjusting the length of it here in this input box. The smaller number will make it based on less number of bars in the past. Right now we're going 20 bars back in the past, which results in a more gradual line. If we use a smaller number, the graph will get more tighter because it will be based on less number of bars back. So let's try setting that to just 5, and I'll show you how tight it will wrap. And we see now it's following the graph very tightly, and we see now a lot more buy and sell arrows coming through. Let's loosen that back up. Let's go to 30. And we see it's much more gradual and smooth. And so if we activate the buy filter, that knocks out most of the buys in this window. We still see this buy, but if we tighten the graph while the buy filter is still active, we see now it knocks out a lot less. We see this buy getting through. So excellent. So that's how that works, and it's very similar for the uptrend sell filter. You adjust the chart so that it looks appropriately for your liking, and anywhere that you see the white dots where there's uptrend, it would not allow a sell alert or a sell arrow to fire through in that situation. So it works just like the buy. So let's switch it. We'll activate the sell filter. It's very tight right now because we have a very small number in for our EMA trend line length. Let's bring it out and smooth it. We'll go with 30. And we see now that this sell arrow is knocked out, this sell arrow was knocked out, and so we'll turn that off and go back to default, and we see those sell arrows come back. Back to default at 20. So that's a powerful feature as well. There's also multiple cutoff buy filters using various indicators, specifically ones that specify overbought and oversold conditions. So with relative strength index, or RSI, the typical overbought level, which you would not want to continue buying more, is around 70. So most people will want to buy when RSI is less than 70. Now there's a lot of exceptions, of course, but that's just the generally accepted level for what's considered overbought, and that's why the default setting here is 70. So if I activate the RSI cutoff buy filter, as it says, it will only allow buy arrows and buy alerts to come through if the RSI at the time of that candle is less than the number you set. So this way you don't end up buying when the stock or the security you're trading on is already overbought. In this particular case, we can say only buy if RSI is less than 70, or we can drop it down to 50 to knock out even more buys. And you'll see that net profit starts going down because we're now starting to knock out certain profitable trades with that RSI buy filter. Sell filter works very similar way, but just the opposite. In this particular case, we only want to sell if the conditions are not oversold. And in this particular case with RSI, oversold is typically specified as less than 30. So we only want to sell if RSI is above 30. And so default is here is 30, and if we activate this, we will only sell if RSI is greater than 30. So the higher that number, the more strict it's going to be. Only sell when RSI is greater than 50, and we'll see we knock out a lot of trades and a lot of potential profit as well. So let's turn that off and keep moving here. Next up, we have our stochastic RSI cutoff buy and sell filter. It's very similar to the RSI cutoff buy and sell filter, except stochastic RSI has a stochastic oscillator applied to RSI, causing it to hit its maximums and minimums a lot more frequently than RSI. As many of you probably know, RSI is a much slower indicator. It takes a long time for RSI to go all the way down from oversold conditions around the level of 30 all the way up to overbought conditions at a level around 70. But with stochastic RSI, we see lots of cycles going from overbought to oversold conditions because it's a second derivative indicator. We don't need to get into all the technicals of all the indicators here, but I do want to help you guys have a basic understanding of each. So stochastic RSI is basically a stochastic oscillator applied to the RSI indicator, which causes it to go up and down and hit highs and lows a lot more. So it's also a very useful indicator to use as a cutoff buy and sell filter. In this particular case, with stochastic RSI, overbought conditions is when the level is greater than 80, and oversold conditions is when the level is 20 or less. And so we want to only buy if we are less than 80 and conditions are not overbought. And again, we only want to sell if conditions are greater than 20, meaning they are not oversold. And so you can activate those filters and adjust those cutoff levels to get various results as well. Again, as you change the numbers, you'll get tighter and tighter and see less and less trades. So powerful tool to use. Next up, we have our money flow index cutoff buy and sell filter. It works similar to relative strength index cutoff buy and sell filter. Money flow index is slightly different though. It represents the influx of money that's coming into a stock or security. So as we see a lot of selling happen and big sell-offs happening, you see the money flow index go down. And as a lot of people are buying and investing into a stock or security, we see the money flow index going up. One of the best ways to use this script, just so you guys know, is to add the indicator to your chart. Just pull it up in TradingView. I'll show you guys how to do that really quick. Go to the indicator section, search under built-ins, or just search in general. You can also search for the public library as well. But just search built-in for the indicator. So in this case, strength index. And we see right here we have RSI. We can then add that to our chart. And we can then see what levels we might want for a cutoff buy or sell filter here to go with our script. So whatever indicator you're using script, if I was looking at RSI cutoff buy and sell filter, I would want to add the RSI indicator here to give me a general idea about what level I would want to set the cutoff buy and sell filter at. So please take advantage of that. So continuing on with the indicators and settings that are coded into the script here, again we're wrapping up with money flow index. It works very similar to the stochastic RSI and regular RSI cutoff buy and sell filters, except it's going about the money flow index filter. There's also a MACD cutoff buy and sell filter. MACD is a more gradual slow indicator, as many of you know, and so in this particular case, the cutoff buy filter simply works if MACD is less than 0. Then the sell filter works if MACD is greater than 0. So only sell if MACD is greater than 0, and only buy if MACD is less than 0. Next up, we have our RSI divergence buy and sell filter. This is an indicator that attempts to capture divergence between RSI and price action. This is hard to code, so it's definitely not a perfect filter, not a perfect indicator. But the indicator itself can help to clean up various buys and sells and help them to happen in more pristine, more perfect locations. So go ahead and give that a shot in tuning the script. Stochastic RSI downtrend buy and uptrend sell filter works simply by ruling out buys, knocking out any buys that are happening if stochastic RSI is decreasing. If you activate this, it will only let buy arrows through if stochastic RSI is not decreasing. Similarly for the sell filter, if price is still rising and momentum is still increasing, meaning stochastic RSI is still trending up, it won't generate sell arrows during that time. This will force sell arrows to only be generated during periods where the stochastic RSI is not increasing. Similar way with the MFI, the money flow index. Do not buy or don't let buy arrows through when the money flow index is falling. And similarly, only allow sell arrows through when the money flow index is rising. And so that's how these filters work. Same thing with the MACD trend filters. Do not purchase or do not let buy arrows through when MACD is trending down or falling. And similarly with the uptrend sell filter, do not let sell arrows or sell alerts through when MACD is rising. There's also a custom-coded Ichimoku cloud buy and sell filter. In short, without revealing all the details of this filter, it ultimately is only allowing buy arrows through when the cloud is positive, and that's one of the metrics that's used with the Ichimoku cloud indicator to determine when buying conditions are right and uptrend should be is likely to be occurring. And likewise, the sell filter only sells when the cloud is negative, suggesting that there's going to be negative price action on the horizon. There's also various oscillators that have been coded into the script. One of them is a popular oscillator known as Awesome Oscillator. Again, all these indicators can be added on TradingView, as I showed you guys a little bit ago, so you can compare what the actual indicator is doing to how these filters would then work. So Awesome Oscillator basically only buys if the oscillator is less than 0, and only sells if the oscillator is greater than 0. Similar function to the Arun oscillator. The Arun oscillator is a custom script that's found in the public library on TradingView, but it does a great job of taking the complexities found within the regular Arun filter and turning it into an oscillator movement, similar to how stochastic RSI adds some oscillatory activity to the regular RSI. And so that's a powerful way as well. And again, this will buy, similar to Awesome Oscillator, the Arun oscillator will only buy if it's less than 0 and only sell if the indicator is greater than 0. The Squeeze Oscillator is a custom oscillator that Bitcoin Ninjas wrote. It's a combination of a Keltner channel combined with a Bollinger Band to determine when there is squeeze or choppiness or noisy trading periods in the market. Basically, when there's not much volatility, the Bollinger Bands will get brought in very tight, and if those bands come within the bands that are set for the Keltner channel, what we say is that the Bollinger Bands have been squeezed into the Keltner channel, and that squeeze is an indicator for low volatility or choppiness or noise, which can help to rule out some of the trades. So in this particular case, we have that custom squeeze oscillator set to only buy when there's not squeeze periods happening, which is represented as less than 0. So this helps you to avoid buys and sells that would happen during choppy periods. Again, it's not perfect, but it's one of the great metrics that can be used to help identify noisy or choppy periods in the market. There's also various channel filters, one of which is called the Bollinger Buy and Sell filter. Now this filter is very extreme. It only allows buys to come through if they close out lower than the lower band, and only allows sells through if they close out higher than the upper band. And as you guys know, with standard settings and standard deviation, the Bollinger Bands usually encompass most of the closing prices. So activating this filter will really cut out a majority of buys and a majority of sells, but in some situations can help clean up things in a way that really gives you some extreme volatility between buy and sell points to take home some big profits. You can also adjust the length of the Bollinger Bands to help them be more gradual or more tight, similar to how you would adjust the length of the EMA downtrend and uptrend filter above, as we went over earlier. You can adjust the Bollinger Bands here. Now you cannot see the Bollinger Bands on the chart, but you of course can add the Bollinger Bands to your chart by adding the regular built-in TradingView Bollinger Band indicator, and it has basic settings. You would just similarly adjust the length here and adjust the one on your chart. So I'll show you guys how to do this actually. That way everybody's covered here. So let's pull up the Bollinger Band. Excuse me, I spelled it there. Built-in Bollinger Band, we have that. We see the default settings here with a length of 20. If you click the settings there, you can see adjustable portions of the Bollinger Band filter. And we see here that the length is currently set to 20 for the Bollinger Band calibration. So we can now loosen out the bands. I'll show you what happens when we do that. We can, just like with the EMA line, if we use a larger number, that means it will go a greater number of bars back into the distant path to make its calculations, which results in a smoother, more gradual line. So if we bump it up to 50, we see how smooth those lines have gotten. If we drop it down to 10, we see they're going to be a lot more choppy. And so if we like how 10 looks in terms of ruling out various buy and sell points, we would then go to our script and say, hey, let's try out a Bollinger Band buy filter using a length of 10. So we would activate the buy filter, set the length to 10, and see what buys and sells are coming through. Now in this particular case, as I mentioned, the vast majority of buys have been knocked out because it's such an aggressive filter. So go ahead and try that out and try different lengths. Get familiar with that. Set that back to default, remove that from our chart. Continuing on, another one of the channel filters that our script offers is called a Keltner channel filter. It's a very narrow filter, a very narrow band filter. So this functions similar to the Bollinger Band filter, where it's only going to buy if the price is below that lowest band and only sell when price is above that highest band. And that way we can get some large distance and some nice distance between our buy and sell arrows to generate some good profit between the arrows. Again, you can adjust the length of the Keltner channel. You could add that to your chart as a separate indicator, test out different lengths to see how it looks visually, and then plug that number in here. 10, 5, 50, different lengths as much as you want. And lastly, we have a Donchian channel buy and sell filter here. And this helps to buy low and sell high as well. I've seen some very good results applying Donchian buy or sell filter, or sometimes buy and sell filter, of anywhere from 5 to 10 or 15, 20. You can get some really nice results with that as well. So that completes the quick step-by-step run-through of all the adjustable filters and settings, except the very last one, which is the date range filter. I covered that briefly in the first part of this video series, so I won't mention it in too much detail here. Plus, it's also very self-explanatory. Basically, when this is on, it will only test whatever date ranges you specify, as long as you're not using so small of candles that TradingView limits to how far back you can go. I want to quickly show you guys that if I'm using tiny candles like 1 minute, it doesn't matter if I'm saying test all the way back to May 1st. 1 minute candles are so small that you hit the TradingView bar limit right away, and it's only going back to about June 17th here, just about 10, 11, 12 days back now. And even though I'm saying go ahead and test back all the way back to May 1st, which is over a month ago, TradingView is only letting me look back about 10 days because of how small of candles I'm using. Now if I go to bigger candles, like 2-hour candles, we see now it's letting me go all the way back to that May 1st time period. Around 11 p.m. on April 30th, right before May 1st started. Now if we adjust the date range filter to test even further back, we could go back to test, let's say, to the beginning of March 15th. We click OK, we go to list of trades, and we see that the trades now start right around the middle of March, March 14th, March 15th. And so that's how the date range filter works. And of course, since I jumped up the candle size to 2 hours, but I'm still using a calibration number of only 150, I'm going to need to increase that to really improve the results I'm seeing on the screen here. So let's try a setting of, how about 1 minute? We're at 2-hour candles. 240. Yeah, that's cleaning it up quite a bit. 60. I like to go by units of 60 and 30 and 90 and 120, and basically multiples of minutes, because that's how the candles work. And so since the calibration is using different candles as its settings, it can be very helpful in finding good configurations. So again, I'm going to try 120, might try 480. But you can see getting some really nice results here. So very good. So that completes the first walkthrough of how to adjust the indicators and filter settings. So let's continue with some of the more subtle details that go with the script. For example, the properties section. Now this is part of the backtesting strategy only, and this is very important to make sure that it makes mathematical sense, otherwise you're going to get some odd backtesting results. For example, right now it's set up properly because I'm wanting to make a full buy with my full trading capital each time there's a buy arrow, without pyramiding, without splitting up my initial capital into 2 or 3 buys. I have my fees set here in the commission box because the fee on Binance, which is the exchange we're using, is 0.05% when you're using Binance coin to pay for your fees. So in this case I want 0.05 for my percent. If I was trading on BitMEX, for example, if you're someone outside of the United States, their fees are around, I believe, the maker or the taker fee there is 0.075%, so I'd put 0.075. If you're trading on Binance and you're not using BNB, you want to use 0.01 for 0.01%. But this will go ahead and make sure to take out this percentage or this amount of fees from your net profit, and that way you're getting a more realistic result. Let's go back to 0.05%. Okay. Now in this particular case, we're not doing any pyramiding. We have our full initial capital, $1,000, and each time we place an order, we're only placing one order for $1,000 at a time. Now, this needs to make mathematical sense, as I mentioned earlier. For example, if I pretend that I only have $500 and I'm saying that I'm trading $1,000 every time, look at how the profit has now become so exaggerated, over 500%. And that's because it's calculating your earnings based on you assuming that you only have $500 in your initial trading stash. Yet somehow you're betting $1,000 every time. It just doesn't make sense, so you get inflated results. And this is also why a lot of TradingView scripts have a lot of results that look really good, but the script doesn't actually perform like it's supposed to because their properties section in their backtesting code is typically inaccurate, generating exaggerated results. Now, all backtesting exaggerates results somewhat because it does not take into account real-time data, intra-bar changes. Sometimes transaction fees are not taken into account properly. Price slippage can get messed up. Even the way that TradingView places some of its arrows. For example, it only will place its buy and sell arrows at bar close, even though technically someone might get out of a trade if a stop loss is hit in the middle of a bar. And that is how the stop loss alert works for our script, is to get you out in the middle of the bar rather than waiting for bar close. But when you backtest that, the TradingView script and backtesting strategies, forces you to actually make it seem as though you did not get out until bar close. So there's a lot of little details and nuances that make the backtesting exaggerated, so it's really important to try to take as accurate of an approach as possible to backtesting so that you can have as much confidence and as much of an evidence-based approach to testing out your trading style and trading strategy as possible. Because the more evidence-based and the more tested and proven your strategy is, the more comfortable you will be and the more you can trust it to produce successful results for you. So let's set this back to where it was, and I'll show you guys how to pyramid. So let's say that I'm trading with $100 and I'm trading all $100 every time, but perhaps I want to allow for pyramid buying. Say that I apply some buy filters, and now certain buys are not coming through. Actually, let's apply some sell filters. We'll knock out some sell arrows. So now we have more buys than sell arrows. 1, 2, 3 buys there, a sell arrow here, another 1, 2, 3 buy arrows, only that one sell arrow. So in this particular case where we have multiple buy arrows for each sell arrow, sometimes we can take advantage of this by doing pyramid buying. This is especially helpful when trying to bring down your dollar cost average, or averaging down, or what's also known as doubling up or doubling down. To some people, you can place multiple buys as price drops, so that as price goes lower and lower, you buy more and more, and the average price of your bag comes down, and that results in more profit once you get to a point of profit where you're going to sell. So for example, say I want to allow more than one buy to happen at some of these buy arrows. I need to make sure it still makes mathematical sense. So let's say I want to allow up to 2 buys for each sell arrow. I'm going to change that to 2, and I'm going to drop my order size to 50, because 2 orders of $50 each equals 100, which is my initial capital. And that's how you can make sure that this makes mathematical sense. And you can see on the chart now that there's a buy here after this buy alert, there's a buy there after this buy alert, and then there's no more buys because we've now hit our limit with our 2 buys. It ignores this buy alert and it now sells at this arrow. So that's how you set up pyramid buying. I can also do 4 buys of up to $25 each. So let's set 4 orders at 25. That still makes mathematical sense because 4 orders times $25 an order equals my initial capital of 100. You can now see that we've got 3 buys got done here before a sell arrow hit, and we'll follow this out and see how that goes here too. So we see there's a simulated buy after that buy arrow or buy alert. After this buy alert, there was another simulated buy. After this buy alert, there was another simulated buy, and then boom, we hit a sell arrow, and it closed out the whole position. Similarly here, we see 1, 2, 3, 4 buy alerts with 1, 2, 3, 4 simulated buys. The 5th, 6th, and 7th buy alerts are all ignored because we've hit our cap of 4 orders times $25 each equals our total capital of $100. And then we close out all those positions here right as price starts to fall. So that's how pyramid buying works. So please just make sure it makes mathematical sense, and that way you're getting accurate or as accurate of results as possible given the limitations of backtesting on TradingView. So let's set that back to default, 1 order of $1,000 using an initial capital of $1,000. And I'm going to show you guys the problem that gets run into when trading on Bitcoin. So let's try out XBT USD on BitMEX, and we see no data down here. So what you need to do if that's happening and you note that you're trading on a US dollar or a US tether pair, USDT or USD, you need to go to Properties. You need to change your initial capital to be the price of 1 Bitcoin. So in this case we go about $6,500. We then change our order size to be 1 contract or 1 Bitcoin. And that makes mathematical sense because we're going to bet 1 Bitcoin each time, and our initial capital is equal to 1 Bitcoin worth of US dollars. Just going to try and get some profitable settings up here really quickly. Turn off the filters here, come on. Okay, there we go. You can see with Bitcoin now it's working successfully. So if you wanted the pyramid with Bitcoin, you would need to, for example, if I wanted the limitation here is TradingView's limitation. It will not let you order any less than 1 coin or 1 contract at a time. So unfortunately for a coin or contract that's as expensive as Bitcoin, being over 6,500 US dollars, you have to have a very large initial capital in your backtesting in order to make it make sense. So even if you don't actually have $6,500, it's important to go through this so that you can see how to properly backtest on Bitcoin. So say I want a pyramid buy and I want to allow for 2 buys. Even if I'm just trading small fractions of a Bitcoin, for the sake of backtesting, given the limitations of TradingView, I would need to make this make mathematical sense by doing this. I can't go any less with contracts, that still needs to be 1 contract, but I'm going to allow up to 2 orders of 1 contract each, which means I need to have my initial capital equal to the price of up to 2 Bitcoin. Otherwise it won't make sense. So let's change that up to $13,000, excuse me, that's the price of 2 Bitcoin. And there we go. And you can see that the results have reflected that they've gone down in profit because now I'm only betting half of my initial capital each time I place an order, as opposed to if I do what I was previously doing, placing all of my initial capital in each order. So that's how that works. So let's go ahead and change this back. Okay, so that's how the properties section works and how to make sure that your backtesting makes mathematical sense. One last thing I want to mention is that you can also enter some slippage here. The larger your candle size, the larger your ticks may need to be, so be aware of that. Slippage is regarding to price slippage that happens from the time an alert is placed until the time that you get an order in. Because sometimes it may take you a few seconds or even a few minutes to place an order depending on how you're trading. Manual trading takes longer than automated trading, of course. But regardless, whatever amount of delay there is after the alert happens but before your order is placed, there may be some price slippage. Price may have dropped a little bit more before you buy and you might get a better buy price, or it might actually slip in the wrong direction and you might buy up a little bit higher than you actually wanted to. So you can take slippage into account by entering that here. And as you can see, the net profit will come down as the slippage gets worse and worse. So if I put 50 in for the slippage, you can see that net profit has gone down because the slippage eats into those profits. So let's get that back to 0, just at default. So that completes the adjustable properties of the backtesting strategy. I also want to show you guys once again that the style tab of the backtesting strategy, as well as the style tab of the script settings, also lets you adjust the various shapes and colors of the various signals that the script generates. You can change the colors of uptrend and downtrend of the EMA line. You can make those different shapes. You can make them, let's make them crosses. You can see that those are now crosses instead of circles. You can make it a step line. There's lots of different ways you can do this. Again, you can change the color. You can make it yellow. You can make it red. Whatever makes you, whatever feels like it's easier for you to view things. So feel free to adjust those settings and have fun with those. Next up, I want to show you guys how to actually set alerts with the script. So let's get things back to default. We'll go to Reset Settings, click OK. I want to set this back to 30. And make sure all our filters are off in this case because we're just testing defaults. There we go. So to set alerts, Once I have my settings determined in the backtesting strategy, in this particular case, for simplicity, we're only going to enter a few settings. We'll enter our calibration setting, and we'll check the Heikin Ash sheet calibration box and the 1-to-1 arrow ratio box. So we'll just do these first three settings. So once we like those results, we feel happy with those and we want to set alerts from those, we have to enter those settings into the script and set alerts from the script. Because again, this is a commonly asked question, the backtesting strategy is for testing out various trading strategies and trading styles based on the alerts that the script generates. So you use the strategy for testing, and then you use the script for the alerts. So I'm going to unhide the script first, click the little eyeball, and now it's showing. Click the settings box and enter those settings. We were using a calibration of 30. We had the Heikin Ash sheet candle calibration setting on, and the 1-to-1 buy-sell arrow ratio filter on. Now that we've transferred those settings over, we click OK, double check them, 30 check, check, everything else is at default, all the way down. We check it here, 30 check, check, everything else is at default, all the way down, looks good. I like to then hide the script again. At this point would be a good time to save your whole chart. You can go up here and click Save a New Chart or Make a Copy. It's very important to save your charts. I like to save a separate chart for each coin, and that way I don't have to mess around with trying to use the same copy of the script in the same chart for multiple different coins that have multiple different settings. You can also save the indicator layout for a certain coin as well. To do that, come and click this button, the Study Templates button, click Save Indicator Template, and just type in the name, and you can choose to save the candle interval as well if you'd like. But that allows you to save all different setups that you have between the Save Template option and the Save Chart option. So I recommend using those to really keep your setups separate and organized. It will really help you. So here's how we set alerts. We've transferred over our settings into the script. We're going to right-click the script, click Add Alert. For a buy alert, I'm going to set this to Buy Arrow, set this to Buy Alert. You can see we properly have the Bitcoin Ninjas TradingView script selected here. We go to Buy Arrow, Buy Alert. I set it at once per bar close. The reason we use once per bar close is because intra-bar changes or changes that happen as a bar is forming can result in a signal flipping before it closes. For example, it may start out looking like a good time to buy, but then a bunch of whales come and sell a whole bunch of currency and it becomes a giant red candle and you want to get out. It may be a good time to sell. For that reason, you want to choose once per bar close. That way you just get the final signal that the bar ends up representing. So for buy and sell alerts or long and short alerts, we recommend once per bar close. So in this case, buy arrow, buy alert, once per bar close. You can use any of these settings you like, such as a pop-up, a sound, an email reminder, a text message notification. Very powerful features. You don't have to use any of them if you don't want, or you can use all of them if you want. It's up to you. And then down here, you place a message for yourself. If you're doing manual trading, you can just put a verbal reminder for yourself, like in this case, it's a buy alert, so buy alert. Or you can say, buy now. Or if you're doing automated trading, this is where you would put different code or syntax to tell your automated trading software to place a buy alert on your exchange. If we were using GunBot, an example of that syntax would look like this. In this particular case, we are telling GunBot to place a buy order on Binance Exchange using the base pair USDT, and we are buying the coin Binance, or BNB. Now for a sell alert, we're just going to do a similar thing. We're going to right-click the script, click Add Alert. We're going to click Sell Arrow and Sell Alert. Again, once per bar close for long or buy alerts and sell or short alerts. Once per bar close, we can select any of these that we want. We then put some message in the message body for ourselves. Sell now, sell alert. Or if we're using automated trading software like GunBot, we would place a sell order command like this. And so we'll go ahead and click OK. And we'll see the alert once it's successfully created. It will pop up here in our Manage Alerts section. Sometimes there's a few seconds delay, and there we can see our BNB USDT sell alert is here. You can check out the settings to make sure we set it properly, that the proper syntax here. If we're using GunBot, we would also want to check the send email, since GunBot works through the TradingView plugin by checking a dedicated email account to convert these alerts into orders. So I would then save that, and we're good to go. You can pause alerts, and the active light will become orange to show inactive, or we can just delete the alerts altogether by clicking X. Now this is also an important time to mention to you guys that in order to successfully use our script with TradingView, a free TradingView account is good enough, but the free TradingView account only allows you to set one alert at a time, so it's really only good enough for testing. But technically you can use the free TradingView account that's available to the public to test out our script by setting just one alert at a time. But in reality, you need at least 2 alerts per coin, because you need one buy alert and one sell alert. And some people use more than 2 alerts per coin, because they may also use a stop loss alert or multiple stop loss alerts, or they might use take profit alerts, for example. So for most people to successfully use the script, you need at least a minimum paid TradingView account, which would be a pro account. And of course, as you climb up the ladder with the more expensive packages on TradingView, you get more and more alerts. I believe the Pro Plus account allows you to have up to 30 alerts. So let's just show you those really quick. That way everyone can have that information addressed as well in the video here. We can see the different plans here. There's Pro, Pro Plus, and Premium. And you can see the different number of alerts here. So server-side alerts, only one is included with the free account, which again is enough to test one alert at a time, but not really enough to trade. Pro account comes with 10 alerts, Pro Plus with 30 alerts, and Premium with up to 200 alerts. So you're going to need a Pro account or better to successfully use our script for live trading. So jumping back to the script, that covers a lot of the details. That's how we set buy and sell alerts. Let's go ahead and show you guys how to set stop loss and take profit alerts. So for a stop loss alert, we're going to select stop loss and stop loss alert. We're going to go to once per bar, because this is something we want triggered as soon as a wick crosses our threshold, even if it's the middle of the bar. And you don't need email unless you want it, or unless you're using GunBot. And again, you put a command here like stop loss and that's how we would create that alert. Same thing for take profit. We would just set take profit and take profit. We'd leave it as once per bar, because that's again something we would want to trigger intra-bar or in the middle of a bar. And again, we just put it in here. And that's how we would set those alerts. So that's how we set all 4 alerts that our script offers. And so go ahead and use various combinations of those. Buy alerts, we can double as long alerts, and sell alerts can double as short alerts, including that also helps for margin trading. And so for margin traders, it's important to mention that our buy alerts will double as place a long and close a short alert, and the sell alerts will double as open a sell position and close the long position alert. So you would see that for margin trading, we'll just activate that option, and our closed position orders have now become shorts. And we see that the long arrows, the buy arrows are now long arrows to make profit on the way up, and then the sell arrows now become short issues to not only close the long position and capture that profit, but also now to open up a new short position and start making profit on the way down. And you can see this reflected in the backtesting area. We'll open one trade with a short and close it with a long, and the next trade opens with that very same long at the very same time that the last short was closed. That doubles as opening up a new long, and which is then closed by a short. And so you just go back and forth, long to short with our script, and it works great for margin trading as well as for regular trading. Alright, what other features are there to cover for you guys? Well, that wraps up. One last thing I want to emphasize to you guys before we wrap up this detailed run through of the instruction is to please create separate charts and save separate indicator templates for your settings as you find profitable settings for your script. That way you can easily come back to them and review your settings, change your settings, and pick up where you left off without having to guess where you were. It can also be helpful to keep a spreadsheet and keep track of your settings as you go, and that way you can not have to do the same type of backtesting twice. You can just look back to your spreadsheet and see how a certain calibration number performed, etc. So with that being said, let's get into the helpful tips. So first up, when first beginning to use the script, only set test alerts. And that way you can become familiar with the script's basic functionality and performance before you attempt to do any live trading. So the first step, once you get the script added and you feel basically familiar with it, is to try and find profitable settings. So again, you're going to find those profitable settings using the backtesting strategy. Once you feel like you've got a good set of settings, you plug those settings into the script and set alerts from the script. So backtesting is really the first step. Once you've backtested, you can then set test alerts to start forward testing or live testing. And so to do that, just like before, you can add an alert, set up a buy alert here, and just put something in the message body that's nothing that would trigger a real order from your automated software, or nothing real that would cause you to place an order. Just put a reminder in there, like buy test alert, buy now. And set some test alerts and calculate prices manually and see how things go, and see if your backtesting strategy is still profitable in the current market condition, and if it's something you feel like you're comfortable with and you can trust, to then go ahead and start doing some live trading with. After you've backtested and then live tested, the next step is to do small trades. Always start small, don't start big. It can be very nerve-wracking if you start doing large trading, but of course how you trade is completely up to you. We're just sharing our own experience with you, but personally, after doing some live testing, after back testing, I then do some small trading. I do not jump into things very big. Also, when first learning to use the script, please consider only setting alerts for 1 or 2 currencies or securities at a time. That way it's very easy to track your alerts, to look back to the back testing results and compare your exchange trading, your actual buy and sell prices, the actual times that the orders were placed, and you can compare those to the backtesting log and see how things line up. It can be very hard to do that if you have 20 different alerts set for many different coins. So please learn from those who have been doing this for a while, and please just set test alerts on only a few currencies. That way it's very easy for you to keep track of prices, timing, and making sure that alerts are matching up with your trading strategy. Next up, what size candles to use and what types of calibration numbers to start out with. For version 1, regular candles work great. For version 2, regular candles often do work, but a lot of times we find that profitable configurations are more easy to find if you use the Heikin-Ashi calibration option. Version 2 does not have the predictive calculation feature that version 1 has, and so it's a little bit harder to use, but at the same time, using the Heikin-Ashi candle calibration option makes version 2 a little bit easier to tune for some of the more difficult coins. Right now we're using version 1, and so we don't need the Heikin-Ashi calibration candle setting on, but in this particular case, it's on. So for version 1, we typically recommend, for both versions of the script, we typically recommend using larger candle sizes. Typically 1 hour or more helps to minimize price slippage, and so what you would do is you'd select 1 hour, and you would adjust your calibration number. Typically for version 1, a larger calibration number works better. So if I'm using 60-minute candles or 1 hour candles, I might try a calibration number of 60, I might try 120, I might try 240. Typically a larger calibration number works better for version 1. With version 2, you're going to want to use regular candles, check the Heikin-Ashi calibration candle box, and if possible, it's best to try and find a calibration number that matches your candle setting. So if this was version 2 and I'm using 1 hour candles, I might try a calibration number of 60. That way they're matched up. Otherwise a number close to 60. The further away you get from the candle size with your calibration number, especially for version 2, the more likely you are to have what's called repainting, where the arrows can shift a little bit. Now repainting almost never happens in version 2 because it does not have that predictive calculation feature that version 1 has, but it still can happen in some situations with version 2, especially if the calibration number is significantly different than the candle size you're using. So for version 2, it's best, if you can, to try and find a setup that's profitable with a calibration number that matches your candle size. So in this particular case, if I was using version 2 and I'm using 1 hour candles, I would use a calibration of 60 to start and then try applying various filters. But since we're using version 1, it's better to use a larger calibration number, so we're going to go to 240 and start from there. So that is commentary on the different candle types and sizes. Again, you can try Renko candles if you'd like, but unfortunately there's a lot of problems with backtesting. The way that TradingView does backtesting, it misplaces some arrows with Renko setups, and so Renko tends to have better results for manual trading, whereas with automated trading it can give some exaggerated results. So definitely be careful when using actual Renko candles or things like line break candles or baseline candles or range candles, some of these more obscure candles that are not as commonly used in trading. Be careful with those. They will work with the script, but they can cause some problems. They can cause repainting with version 2. They can cause some mismatches in buy price and sell price, which can cause some major price slippage. So the best candle option to use for version 1 is just regular candles, and for version 2 is to use regular candles with or without the Heikin-Ashi calibration box checked. Once we've found some basic profitable settings simply using different candle sizes and different calibration settings, we're then going to move on to further tuning the script and customizing our strategy by adding and adjusting some of the various filters. One of our goals during this whole process is to try to maintain an average trade of around 1% or more. Now the reason for that is because with things like price slippage, fees, intra-bar changes, and other issues, it's nice to not be just trying to scalp tiny little profits with each trade. For example, having profit of only 0.2% per trade or more is probably a bit too small. When we use the script, we like to generate at least 1% profit per trade on average or more. So we try to aim for that in our backtesting result. Once we've hit that minimum and we've gotten over 1% profit per trade or more, we then like to try and maximize things like the net profit, our profit factor, and the percentage of profitable trades. Another important item to look at is the max drawdown. This is the amount that price will go in the wrong direction before a winning trade happens. So in this case, the maximum drawdown is 1.65%. And what that means is that even in the worst case scenario of the worst possible winning trade that I had that still ended up generating profit, even in that situation, the price had still dropped to be a 1.65% loss before price then rebounded and became profitable. So max drawdown can help you in setting your stop loss because if even if the worst yet most profitable trade ended up falling 1.65% in price, you can guess that setting your stop limit probably needs to be greater than that. So possibly around 2% or 3%. That way your stop loss is not too tight and interfering with trades that were profitable but first dropped in price and went into the negative before later becoming profitable. Another important note to feature with the backtesting strategy is there's also a performance summary tab. If you click that, you can see a layout of all the different trades. You can see net profit, gross loss, max drawdown, buy and hold return, profit factor, lots of different things. The average trade, the average winning trade, average losing trade, etc. Lots of different statistics and trading information broken down here in the performance summary tab. You can also export your results from each backtesting run by clicking export, and that will copy those to a clipboard. So very powerful setup here to be able to test out your trading style and to test out how you would trade with these alerts using the backtesting strategy that accompanies each of the scripts. We've already covered how to properly do pyramid buying by making sure that makes mathematical sense, so we don't need to go back through that. But the last thing to do really is just to apply filters. So once you have some base profit generated, you're going to need to come through here and use some of these filters to clean things up more. Some of the general strategies I like to utilize when tuning the script is to try to stick to just applying buy or sell filters on your first run through, and then as you go through a second time, then try only the opposite type of filter. And this can be more or less successful with or without the 1-to-1 error ratio filter, because obviously if you have that filter on, as you apply buy alert filters, it's also going to then affect when sell alerts come because you have that 1-to-1 arrow ratio filter on. So sometimes it's nice to keep that on and then apply only one filter type, like only buy filters or only sell filters, and then see how results are generated. Or you can try leaving that off, then applying some filters, and then if things aren't quite as tight as you like them, you can then activate that 1-to-1 arrow ratio filter, and then it will start checking the other arrows that are not filtered out. So it's very useful. There's a lot of different ways to approach this in a lot of different combinations. And that pretty much summarizes the first major approach to calibrating or tuning our Ninja Signal script. Now just to recap briefly, the first major approach to calibrating the script involves looking for a profitable combination of calibration setting and candle size, and then moving on secondarily to applying various filters and indicators, as well as adjusting your stop loss and take profit levels to ultimately maximize the results you see in the backtesting strategy. Now a second main approach to calibrating the script involves starting with indicators and filters and coming back to the calibration setting and candle size setting later on. When taking this approach, it's nice to use filters from the same general category, meaning a couple of buy filters or a couple of sell filters. And after you've applied those, for example in this case I've applied the Arun Oscillator buy filter and the Awesome Oscillator buy filter, I would then come back up secondarily to the calibration setting and candle size, and then try to maximize the results I see in my backtesting strategy by changing those. But regardless of which approach you use of those two main approaches, you're going to want to make multiple passes through the settings before and after plugging them into the script to maximize the results of your backtesting, as well as to make sure that you've perfectly copied over the settings that you've determined into your script. You want to make sure that those alerts that you're using are using the exact same settings as those settings you found in your backtesting strategy. And that pretty much wraps up the general approach to calibrating the script, and so we're pretty much done with the second part of this video series. We've covered the Ninja Signal script in detail. We've gone through detailed step-by-step instructions about how to find the script and add it to your chart on TradingView, how to set various alerts using the script, how to use the different filters and indicators that are built into the script. We've covered different general tips such as different calibration approaches to try, different candle sizes and types. And lastly guys, we just want to ask for your help. If there's any questions that we haven't answered in these videos or any other topics or concerns you guys have, any feedback you have for us, please let us know. There's multiple ways you can get a hold of us. All of them are good options, but please consider reaching out and getting a hold of us and letting us hear your feedback. One of the best ways to get a hold of us is by email. You can email us here at ninjasignals@bitcoinninjas.org. Another great way to reach out to us is to use our frequently asked questions section of our website. You can submit your own questions here if you don't see the question that you're looking for an answer for up on our website yet. So feel free to submit any questions you'd like us to answer here. And of course, you can also find us on Telegram. You can see the link to our main Telegram chat group here, t.me/bitcoinninjas. You can see it also here. And if you have any questions specifically about the script, we also have our 24/7 Ninja Signal script support group. An easy way to remember that link is here, tinyurl.com/ninjasignals. And of course you can email us, like I mentioned, at ninjasignals@bitcoinninjas.org. So please reach out to us, share any feedback or comments or questions that you have, and we want to help you guys all to be successful. So please, we hope you enjoy using the script, and please let us know if there's anything we can do to help you guys increase your level of success when using the script. And with that being said, we'll see you guys in part 3 of this video series. Take care.